Business scope of Chinese companies. In China, every company must define its business scope during registration. You cannot just register a company and do whatever is legal. It's not Singapore. In China, you can only operate within the activities listed in your license. This is called business scope. In Chinese, 经营范围. Why does this matter? Because your scope controls what kind of business you can actually do, what invoices, 发票 you can issue, what licenses and tax registrations you can get, whether banks and customs accept your operations. Let's say your company's scope only says consulting, but you start importing and exporting products. That's the problem. You won't be able to register with customs, export goods, claim VAT refunds, or even explain your revenue to the bank. So scope is permission. No scope, no permission. Then the reasonable question arises. Why don't we just list everything we potentially might do? Unfortunately, no. If your scope is too wide, it can look suspicious to authorities. They won't give you a business license. So how to get it right? Here is what we recommend. Match your real business. Don't copy someone else's template. Think clearly. What will your company actually do? Use legal terms in Chinese. The government reviews the Chinese version, not the English one, so your lawyer or agency must phrase it correctly in Chinese terms. Keep it flexible, but not too broad, not too wide and not too narrow. Find a balance. And start simple, expand later. You can change your scope in the future, though it takes time. Maybe 2 weeks, maybe a couple of months. So the key part, get right from the start. You will see the examples on the screen. Here are 2 business scopes widely used in our client's profile. Feel free to pause the video if you want to read them more carefully. But there is more that you need to know. Business scope is not enough in some industries. Some activities like food, medical devices, HR, education or fintech require additional licenses or permits, even if listed in your scope. In other words, having import of food in your business scope doesn't give you the legal right to import food to China. You'll also need a special license. We will cover this in detail in part 6 of this series about licensing and industry regulations. Second, your scope affects tax classification. In China, tax depends on the nature of your business, and your scope defines that. So, for example, consulting, usually 6% VAT. Trading, 13% VAT. Some services may fall under special tax policies. If your scope doesn't match your invoices or actual activity, you could end up in the wrong VAT category or face penalties from the tax bureau. Third, banks also check your scope. When your Chinese company receives or sends money, the bank checks whether that payment matches your business scope. If your scope says consulting, but large payment comes from the goods, the bank may freeze the transaction or report it. If your scope says domestic trade, but you request a cross-border transfer, again, questions will be asked. Banks in China are very risk-sensitive. They follow SAFE, Foreign Exchange Authority, rules strictly. We will go deeper into how Chinese banks work in part 7. Bottom line, your business scope isn't just a formality. It defines what your Chinese company is legally allowed to do. And if you get it wrong, you may face some extra unnecessary problems or delays. So get it right and get help of Chinese lawyers or accountants before you submit anything. In the next video, we'll talk about registered capital, how much you need to declare, when and how to pay it, why it matters to your profits or your business partners, what is 面子, FDI, and what problems you will face here if China considers you sensitive. Subscribe to stay updated, and let's keep going.